What if I told you the British Empire wasn't built by generals but by bankers? Not by cannons but by credit. For centuries, nations believed power came from armies and territory. But Britain discovered something far more dangerous. It discovered that if you control the debt, you control the war. If you control the credit, you control the world. While other empires collapsed under the cost of endless conflict, Britain did something radical. It turned borrowing into a weapon. It transformed investors into silent partners of conquest. And it built a system where every war, every trade route, every crisis generated profit. This wasn't just empire by force. It was empire by finance. And the system they created didn't disappear. It evolved. To understand the modern world, and who truly holds power today, we need to go back to where it all began. To understand it, we need to step back to the 17th century, when England was not yet the mighty empire we imagine today. At the time, Spain and Portugal had sprawling overseas territories, France was on the rise, and the Dutch Republic dominated global trade with its powerful navy and sophisticated financial markets. England, in comparison, was small, fragmented, and perpetually short of money. Wars against France and the Dutch had drained the treasury. Kings borrowed heavily and defaulted often, scaring off potential lenders. By the late 1600s, England's credit was a disaster. And without credit, you could not fund an army, you could not build a navy, and you could not project power. But in 1694, something happened that would alter the trajectory of Britain forever. Parliament approved the creation of the Bank of England. On the surface, it was a simple idea. Wealthy investors would lend money to the crown to finance a war against France, and in return, they would receive government bonds paying steady interest. To manage this, a central bank was created, a bank that could issue notes, hold deposits, and guarantee the repayment of those loans. But beneath the paperwork lay a revolution. The Bank of England institutionalized debt. It turned the shaky promises of monarchs into tradable securities. For the first time, the English state could borrow reliably, at lower rates, and on a massive scale. This was the hidden weapon of empire. With a stable system of public credit, Britain could fund wars long after rivals went broke. France, Spain, even the mighty Dutch would struggle under the weight of borrowing costs, while Britain tapped its deepening bond market again and again. Every war was now a financial contest, and Britain had figured out how to rig the game. Take the War of the Spanish Succession in the early 18th century. Britain, a relatively small island nation, was able to maintain armies on the continent and fleets at sea for over a decade. Not because it had more resources than France or Spain, but because it could finance the fight through a steady stream of loans backed by the Bank of England. Investors knew the bonds were safe. Taxes collected from trade and industry, especially the rising revenues from customs duties, guaranteed repayment. France, meanwhile, defaulted repeatedly, undermining confidence and forcing it to pay crushing interest rates. War had always been about muskets and men, but now it was also about bond markets. Britain could outborrow, and therefore outlast, its enemies. This system only grew stronger throughout the 18th century. By the time of the 7 Years' War in the 1750s, Britain was borrowing on a staggering scale. It raised more than £100 million, an astronomical sum for the time, to finance campaigns across North America, the Caribbean, Africa, and India. France, though larger and richer in theory, could not keep up. The war bankrupted the French crown and set the stage for the financial crisis that would erupt into the French Revolution. Britain, meanwhile, emerged with a global empire and, crucially, with an investor class at home who had grown wealthy from the steady interest payments on government bonds. War was not just a patriotic enterprise. It was a financial opportunity. But war was only half the story. Trade was the other pillar of Britain's financial empire, and once again, the bankers were at the center. The 18th century saw the expansion of joint stock companies, especially the infamous East India Company. This was no ordinary trading firm. It was part corporation, part government, and part military machine. Investors in London bought shares, expecting dividends from trade in spices, textiles, and eventually opium. But those profits came from conquest. The East India Company raised private armies, bribed local rulers, and extracted taxes from millions of people in India. Its revenue streams were then funneled back into the City of London, enriching bankers and bondholders alike. The financial system created a cycle. Britain borrowed to fund wars. Victories expanded trade. Trade generated customs duties and corporate profits. Those revenues repaid the debt. And the repaid debt encouraged more lending. It was a feedback loop between credit, commerce, and conquest. And while it might have looked like Britain's empire was driven by admirals and generals, the real empire builders were the bankers who kept the credit flowing. By the early 19th century, this system had reached new heights. Consider the Napoleonic Wars, a conflict that dragged on for over 2 decades and consumed the entire continent. France under Napoleon was powerful but financially brittle. Napoleon relied heavily on plunder and forced contributions from conquered territories. Britain, by contrast, could raise money continuously on the London bond market. In total, it borrowed over £600 million during the wars. At one point, the interest payments alone consumed nearly half of government expenditure. And yet investors kept lending, confident that Britain's vast trade networks and growing industrial economy would cover the bill. This confidence was not misplaced. Britain outlasted Napoleon not just on the battlefield but in the financial arena. And here is where the story takes a darker turn. Financing empire wasn't just about defeating rivals. It was also about control at home. The British taxpayer shouldered the cost of debt through taxes on goods like tea, sugar, and tobacco. Everyday people paid higher prices so bondholders could receive their interest. Meanwhile, bankers grew ever more powerful, able to dictate terms to governments desperate for funds. Economic history shows us that money and power were not separate forces. They were one and the same. And Britain had perfected the formula: debt as a weapon, trade as the fuel, and finance as the engine of empire. As Britain expanded its reach in the 19th century, finance became even more important than armies. Wars were still fought, but often the real victories were won in counting houses and on trading floors. Nowhere was this clearer than in China during the Opium Wars. On the surface, these wars were about trade restrictions. In reality, they were about money and power. Britain had developed an insatiable appetite for Chinese tea, porcelain, and silk. The problem was that China demanded silver in payment, draining British reserves. To fix this, British merchants, backed by financiers, began selling Indian opium into China. The profits balanced the trade deficit, and the silver flowed back to London. When the Chinese government tried to shut down the opium trade, Britain sent its navy. The result was humiliation for China, forced treaties that opened its ports, and a massive expansion of British-controlled trade. And once again, the profits from opium, from shipping, from banking fees flowed into London, reinforcing the empire's financial dominance. By mid-century, Britain was not only the workshop of the world, churning out coal, steel, and textiles, but also its banker. The City of London had become the financial center of the globe. British banks financed railways in Argentina, mines in South Africa, and plantations in the Caribbean. Sterling was the currency of choice for international trade, and British consuls and gunboats ensured that debts were repaid. This was empire by ledger and loan agreement as much as by flag and garrison. And it meant that Britain's financial system reached into the daily lives of millions of people who would never set foot on British soil. The gold standard cemented this power. By tying its currency to gold at a fixed rate, Britain projected an image of stability and trust. Investors worldwide flocked to sterling assets, knowing they could be converted into gold on demand. This credibility allowed Britain to borrow cheaply, to lend expansively, and to enforce financial discipline across its empire. Countries that wanted access to British capital often had to align their own currencies and policies with London's expectations. In effect, British bankers exported not just money but also monetary policy, creating a system where financial compliance was a prerequisite for participation in global trade. But this system had winners and losers. For wealthy investors in London, it was a golden age of steady returns. For colonized nations, it was often a trap. Resources were extracted, debts imposed, and economies reshaped to serve imperial priorities. India, for example, provided massive tax revenues and raw materials but suffered repeated famines as grain was exported to meet the demands of global markets. The profits enriched the empire's bondholders, while millions starved. The financial system revealed its brutal logic: efficiency for investors, devastation for the vulnerable. The deeper we look, the clearer the pattern becomes. Britain's global domination was not the product of military genius alone. It was the outcome of a financial system that converted risk into opportunity and disaster into dividends. Wars that bankrupted other nations enriched Britain's bankers. Trade deficits that threatened to drain resources were flipped into monopolies backed by force. Even crises were transformed into opportunities for financial expansion. When the United States struggled with its own debts in the 19th century, London financiers stepped in, buying American bonds and lending capital for railroads and infrastructure. In many ways, America's rise was bankrolled by Britain, a reminder that empire was as much about who held the debts as who held the territory. So why does this matter today? Because the world we live in still runs on the foundations built in that era. The financial system you use, the credit markets, the bond markets, the very idea of national debt as a permanent condition, is a direct descendant of what Britain created in the 17th and 18th centuries. When governments today borrow trillions, when wars are financed with debt rather than taxes, when investors profit from conflicts that devastate ordinary people, this is the same playbook. Britain may no longer rule the seas, but the model of finance it pioneered still rules the world. Think of the global crises we've seen in just the last century. The First World War was financed by debt on a scale the world had never seen, and Britain leaned heavily on American bankers to sustain itself. The Second World War shifted the balance further, with the United States emerging as the new financial center, but using the same formula: debt, bonds, and the fusion of money and power. Even today, when you hear about quantitative easing, sovereign bonds, or international bailouts, you are seeing the same system in action, one where credit is weaponized and finance dictates the fate of nations. The lesson of Britain's financial empire is simple but uncomfortable. Real wealth is not just about resources or industry. It is about control of the financial system. Those who issue the debt, who set the terms, who control the flow of capital, they are the ones who shape history. Britain's bankers understood this centuries ago, and their system built an empire that lasted longer than any battlefield victory. And here is the question for you: who holds that power today? When you see global debt climbing into the hundreds of trillions, when wars seem endless and strangely well-financed, when financial bubbles inflate and burst leaving ordinary people ruined but bondholders intact, do you think we've escaped the system, or are we still trapped inside it? Economic history suggests the latter. If there is one lesson to carry forward, it is this: financial education is not optional. It is the shield against being exploited by the same dynamics that built empires and crushed populations. Understand how money and power intertwine. Question the debts you are told are inevitable. Recognize when inflation, bubbles, or global crises are being used as opportunities for others to profit at your expense. Because history does not repeat mechanically. It evolves. But if you fail to understand it, it will crush you just the same.